US markets ended lower yet again for the fourth consecutive day overnight, with caution remaining ahead of the budget decisions in Washington and the uncertainty surrounding the Fed's decision to continue providing stimulus. We've had quite a few Fed officials speaking all throughout this week, so comments on both sides of the coin are going to be flying around. New York and Atlanta Fed presidents have spoken already with a dovish tone, supporting the decision to continue the bond buying program. But Dallas was a little more hawkish, saying that if he'd been given a vote, he would have opposed the decision. Kansas president said last week that the Fed confused the market with the decision. She was the only dissenter on the FOMC vote. Cleveland president declined to comment on the current outlook in her speech to a symposium. Debt ceiling concerns still lingered, coming into the October 1st deadline for Congress to get their act into gear and keep the government funded. Most likely we'll get a last-minute decision again, which may end up pushing the major decisions down the road once more, and we'll hear the kick the can down the road line over and over again. In economic news, home prices climbed 0.6% in July. Compared to a year earlier, prices were up 12.4%, marking the strongest rise since February 2006. Consumer confidence, however, declined slightly in September. European markets closed higher Tuesday after the economic data from Germany lifted markets. However, the rise was capped with the concerns of the outcome of the German elections, now that Merkel is beginning negotiations with her centre-left rivals to form a grand coalition between her conservative bloc and the Social Democrats, the SPD. She unfortunately fell 5 seats short of an absolute majority in the election Sunday, but it did mark the best election result in more than 2 decades for her party. Talks must now begin to form a coalition, and this is going to bring fresh hurdles to measures already in place to reinforce the economic and monetary union. Merkel had a similar arrangement in her 2005 to 2009 term, which worked well for her party but did not work well for the SPD, and there will be fear in the party's ranks that the same sort of binding will yet again compromise the SPD. As a result, the SPD could put more demands on the agreement that will not sit well with Merkel's party, compromising current political reforms that are in place. Investors in Europe are also concerned about the future of US monetary stimulus, with a raft of comments coming from the US Fed officials. In economic news, the German business confidence rose less than economics forecast in September, but still showed an increase for the last 5 months and reached its highest level since April 2012. Mario Draghi, ECB president, spoke overnight and continued to reiterate his promise to keep official interest rates at or below current levels for an extended period of time. He said they are ready to use another long-term refinancing operation, if needed, to curb market rates. Asian markets pared back some of the losses gained earlier in the session as investors continued to remain concerned over the Fed's decision to continue the bond buying. Shanghai, the ASX and the Kospi all posted losses, whilst the Nikkei closed flat after being shut for a long weekend. Shanghai fell on profit-taking, but managed to regain some of the losses after hitting a 1-week low during the session. Property stocks led the declines after the official China Securities Journal said that the government is organising a new round of training next month to prepare tax officials to introduce property taxes. Prices in heavy metals kept the ASX lower. South Korea managed to cap losses with gains in Apple suppliers, helping offset the losses on other stocks. Major news today includes the US dollar. Have a great day.